Today, Bitcoin rises after the Senate passes a deal to bring the government shutdown to an end. We explain why the Trump administration wants to allow crypto-backed mortgages. And Sam Callahan with OranjeBTC breaks down what's driving Bitcoin's price as the Senate deal brings the government closer to reopening. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Bitcoin is in the green to kick off the week after senators took a critical step toward a potential deal to end the historic U.S. government shutdown. As of noon Eastern, Bitcoin climbed more than 1% to the $105,000 level. Ether traded flat and XRP surged 8.5%. Now, the moves come as investors continue to monitor lawmakers' negotiations to pass a federal funding bill that would end a shutdown. A procedural measure that allows other votes on the agreement was approved by a minimum of 60 yes votes after 8 senators in the Democratic caucus broke with party leadership to support the deal. Now, that deal would reopen the government through January and reverse some of the recent mass federal layoffs. It also includes future protections for government workers. The agreement does not include an extension of ACA credits, a key sticking point for most Democrats, but it would call for a vote on the subsidies in December. A final count in the Senate on the funding bill will need to be held, followed by passage by the House. Now, according to a University of Michigan survey released on Friday, fears over the shutdown have driven consumer sentiment to its lowest level in more than 3 years, just above its worst ever. And that, of course, impacted markets. Taking a quick look at a crypto-related company, eToro shares are on the rise by more than 8.5% as of around 12:15. After the retail trading platform reported Q3 results this morning, which topped expectations amid strong crypto trading activity. Now, that said, the stock has struggled since its May IPO, down 27% since hitting U.S. markets. Okay, as home prices hover near record highs and mortgage rates continue to give home buyers pause, the Trump administration is looking at how to incorporate digital assets into the home lending process. Crypto World's Talia Kaplan is out with a new explainer on how crypto-backed mortgages would work and what it means for the housing market.
It's no secret that it's getting harder and harder for young Americans to buy a home. The median sales price for a house in the United States is hovering near all-time highs, above $400,000. And at the same time, new data out from the National Association of Realtors last week finds the median age for first-time home buyers reached 40 years old, a new record. Now, this trend of unaffordability has some in the crypto industry touting digital assets to be a game changer in buying a home. And the federal government under President Trump is on board. Back in June, Bill Pulte, the head of the Federal Housing Finance Agency, which leads Fannie Mae and Freddie Mac, ordered the 2 mortgage enterprises to draft proposals to include crypto as assets in single-family home loan applications. The move isn't a total first. Some private lenders already let customers list their crypto assets when applying for a loan, but Fannie and Freddie are the largest buyers of U.S. mortgages, upwards of 70% of them. So the move, if approved by both Fannie and Freddie, would tie crypto to the housing market in a big new way. But what does this all mean for the housing market? Well, I spoke to 2 experts and they say the process could look similar to how applying for a mortgage works now.
You show your assets, you show your bank statements, maybe now you would show your crypto portfolio as well if you wanted that to be counted. But you don't even necessarily need to show that if you didn't want to. I don't think it would be a make it or break it in terms of getting qualified for a loan for most people, because I think banks still would want to see reserves that are held in safer forms like stocks, bonds, or cash. But, maybe it'll help slightly on the margin, especially for people who are all in on crypto.
Fannie Mae and Freddie Mac can set guidelines. They may have to haircut the assets if they're going to count them towards your assets as a purchaser of a home. So you come to them and say, my income last year was X, and by the way, I have $10 million worth of Bitcoin. They have to decide how much of that they're going to count towards the credit assessment.
Democrats in Washington have expressed concern about the proposal, though. 5 senators, including Jeff Merkley, Elizabeth Warren, and ranking member of the Senate Banking Committee, Chris Van Hollen, sent this letter to Pulte requesting information regarding his directive to Fannie Mae and Freddie Mac. The senators expressed concern that crypto is more volatile than traditional assets and stressed that Congress and the public should better understand the agency's decision-making process to assess the potential risks and benefits to the order and the implications for the housing market.
I think that we should be worried about risks in the mortgage market. I mean, that's what caused the financial crisis of 2008. But I think that crypto probably isn't going to be what brings down the mortgage market this time around. And especially if those crypto investments are weighted based on that risk, then that should account for it. I don't think that you can say that crypto as a whole is going to be a problem as long as the risk is properly accounted for. So if anything, I would want to see, what those guidelines actually entail to make sure that the crypto is being properly downweighted based on its volatility.
Wyoming Republican Senator Cynthia Lummis wants to codify the initiative into law through a bill she introduced over the summer called the 21st Century Mortgage Act. Senator Lummis said that the legislation embraces an innovative path to wealth building, keeping in mind the growing number of young Americans who own digital assets.
The vast majority of people who own digital assets are people who are also first-time home buyers. And in this environment, buying a home is almost cost prohibitive. What we're trying to allow people to do is when they show their net worth for purposes of qualifying for a loan, that their digital assets be included as assets on their balance sheet. So they have that equity to prove up their worthiness of having a home mortgage.
Experts tell me it's still unclear whether this bill could become law. The government shutdown has already delayed progress on crypto legislation, and with the midterms now a year away, lawmakers could turn their attention to other hot-button issues as they seek re-election. For more on this story, check out our full video on what crypto-backed mortgages could mean for the housing market by going to youtube.com/CNBC.
All right, back to markets for our main story. Sam Callahan, Director of Bitcoin Strategy and Research at OranjeBTC, breaks down what's driving crypto prices right now and what we can expect as we approach the end of 2025. So Sam, what's your reaction to this rebound that we're seeing in Bitcoin today, and just how much are U.S. politics driving the narrative for crypto at the moment?
Yeah, well, first, thanks for having me on, Mackenzie. I've been a big fan of your work for a long time now, so great work. I think it's definitely a part of it. It's definitely a part of the story. We've seen kind of a pivot recently from the Federal Reserve in terms of their liquidity. When they say they're going to stop QT, that's good for liquidity. When they're starting to cut rates, that's good for liquidity. On the fiscal side of things, we still have them running multi-trillion-dollar deficits. They can't get their fiscal house in order. All of that's good for Bitcoin's value proposition as a scarce, hard asset. And so even though we've had Bitcoin kind of chop around here and come under some pressure, we had a slight correction. Bitcoin's long-term value proposition as a hedge against currency debasement in this environment is never more compelling than today.
Is the recent pullback a threat to crypto treasury companies like yourself, or is it a buying opportunity?
Well, I think we've seen some compression as Bitcoin's price has fallen in terms of the MNAVs for these treasury companies. I mean, maybe there was a little bit of speculative mania earlier in the summer, and so you see those multiples kind of blow out, but now they're coming back down. I mean, right now, it's hard to say that an MNAV of 1 or around 1 isn't a good entry point for these treasury companies. When you look at treasury companies, what they're really doing is they're improving access to Bitcoin for large pools of capital that simply can't access spot Bitcoin. So large institutional investors who are restricted via investment mandates or regulations that can't buy spot Bitcoin, but they can buy Bitcoin-backed securities. And so when you think about strategy, what they're doing with their perpetual preferred credit instruments, or just equity that's Bitcoin-backed, this is really, it improves the access of Bitcoin for these large institutional investors. And so I think you're going to continue to see these treasury companies grow. You're going to continue to see them accumulate Bitcoin because they fit that need in the marketplace.
Now, both Ether and Bitcoin have faced a sharp pullback since the beginning of October, but Ether fared worse after outperforming Bitcoin year to date at the end of the summer. Right now, ETH's up 6% since January, while Bitcoin is up 13%. Do you expect Bitcoin to outperform ETH and other alts as the year comes to a close?
Yeah, I do, because I think Bitcoin is separating itself from the rest of cryptocurrencies. I think it's increasingly seen as the institutional grade crypto asset. And that's because of it's a different technology. It has different security assurances, different it's a different consensus mechanism. It's proof of work, where these other ones are more proof of stake, and they're more experimental technologies. Bitcoin has a track record. It's never been hacked. It's never been more secure. And it's more liquid. So 3 weeks ago, we had one of the largest crypto liquidations ever, almost $20 billion. But really what we saw was that a lot of these cryptocurrencies lack liquidity, unlike Bitcoin. And so if you're a large institutional investors and you're seeing these other coins drop 90% in one day, that's not liquid enough for you to bring in a lot of size. And so Bitcoin really is one that stands apart when it comes to liquidity and these different dynamics like its security. So I really think that when you see large pools of capital, trillions of dollars that these asset managers manage, they're not going to look at these other cryptocurrencies because they're simply not liquid enough or not large enough for them. But Bitcoin is. And so I think you're going to continue to see Bitcoin kind of separate itself. And I think you're going to see that for the next 1, 2, 3, 5 years.
What should investors be watching when it comes to crypto catalysts that they maybe aren't paying enough attention to right now?
Well, I think one thing that, in the Western world, we focus on U.S. markets, but Bitcoin's a global asset. And so, yes, the Fed just started to cut rates, but 85% of central banks around the world are cutting rates. And obviously, we know that other fiat currencies are a lot more unstable than the dollar. And so, OrangeBTC is the largest Bitcoin treasury company in Latin America. And why we're growing a company there is because they have more fiat a debasement there. And so there's a need for Bitcoin access there. And so I think looking at this market as a global market is sometimes missed by investors in the United States or in Europe. And so I think that's a focus that you have to take into account because Bitcoin is a global, scarce, hard asset.
Now, on the adoption front, we heard from Cathie Wood last week, who made a point that she was lowering her end-of-decade price target for Bitcoin as she watches stable coins take over some of the jobs that she thought Bitcoin would have in the financial system. Is there a risk of Bitcoin facing increased competition that perhaps tempers some of the sky-high expectations from the crypto community?
I don't think long-term. I know that prediction from ARK Invest, they dropped it because they thought that Bitcoin would take more of the payments market in up to 2030. And obviously stablecoins are growing massively in that department. Over the long period of time, Bitcoin can still grow into a very good medium of exchange. And already you can use the Lightning Network to do cross-border payments pretty cheaply. But right now it's pretty much seen as a store of value. So I think Cathie Wood dropped her estimates from like 1.5 million down to 1.2. And so that's because Bitcoin's still the premier store of value asset. And it's finding product market fit as that long-term wealth preservation technology. And that's because of Bitcoin's characteristics of its scarcity. And so I think you're going to continue to see Bitcoin kind of viewed that way. But over a long period of time, decades and decades, there's no reason to believe that Bitcoin also won't be adopted as a payments technology. But right now, stable coins are being used for that purpose. But it's important to note that stable coins are still fiat currencies in kind of a fancy new technology wrapper. But it still faces the same debasement risks. Like you don't want to hold stable coins for 10 years. You're going to lose purchasing power over time. But that's unlike Bitcoin, which is able to preserve its value over time. And so I think you're going to continue to see Bitcoin adopted as a store of value primarily over the next 5, 10 years. But then if you zoom out 20, 30, 40, 50 years, I think you're going to also see increased adoption on the payments fronts with Bitcoin too, along with stable coins.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.